thank you very much for joining us again. We spoke about 10 days ago about a potential market correction, which you foresaw in our COVID webinar. So first question, and we're Friday the 12th of June, is what is your take on the return of market volatility this week?
Well, the market had rallied particularly strongly, and in the seminar, if you remember, we were talking about risks coming ahead. It looks like those risks are now materializing somewhat. In particular, the big disconnect between the market valuation and the macro picture. The macro numbers are starting to come in, and there's a bit of a wake-up call here. So I'm not surprised volatility is back up. Big day yesterday, very painful in fact, but there might be some more to come. A lot of themes to discuss. The disconnect, as I mentioned, the signals coming from the Fed, that might not be market supportive. The virus backdrop, which Sarah and Graham, as you remember, discussed at length, that's still a big theme for the market. And all that is undermining investor confidence.
Okay, so what's your outlook for the market for risky assets? I mean, where would you position yourself over the coming weeks?
After yesterday, I fear that there's going to be a bit more repricing going through in the near term. I would be very cautious. We had that big momentum going through since the seminar we held 10 days. If you remember, the market had been particularly strong. In fact, probably stronger than I thought it would be. But as a result of that, it's now probably correction time in the near term. After yesterday, I expect some follow through and a few more % down for risky assets.
Okay, so we've got basically data coming in quite weak as expected. The known unknowns is a potential second wave, but I think an important factor is the comment from Jerome Powell this week. So what do you think? How do you interpret the Fed's comments going forward?
Yeah, it was not very supportive for risky assets in my view. This idea of no rate normalization, no rate hike until 2022, I take that as a signal that the Fed doesn't really believe in the V-shaped recovery. And as we highlighted during the seminar, the market was pricing in for perfection, for that V-shaped recovery. So there's a bit of a conflict there. And that is something that investors have taken note of, and hence the correction risks.
Okay, thank you. Benoit, if that's okay, we'll come back to you regularly for updates. And thank you very much for taking the time today to join us.
Thanks, Mathieu.